Hi, welcome back. It's Adam again. Thanks so much for joining me. Today I'm going to talk to you about the IRR, and I'm going to say it with an American accent, the IRR. It stands for the internal rate of return, and it is commonly used by sponsors to illustrate how strong their project is going to be by projecting out in time how much they are projecting the project is going to make. They use this concept of the internal rate of return. But what is it? All right, so let's take a look at where it occurs in its natural habitat, right? So we go to the Small Change website and we'll click on completed projects and we'll scan down here to the tiny house at the very bottom, and you can see over here on the right hand side actual return 17% plus IRR. So don't feel bad if you don't understand what this term is. Let me make this point. First of all, it is commonly used, but it is very uncommonly understood even by professionals in the industry. The way that it works basically is that it looks at the total returns that you are going to receive or projected to receive over the life of the project, and then it averages it out on an annual basis. However, there is much debate in the industry about the validity of looking at the IRR. It is just one component that you should look at in order to understand exactly what the returns are going to be. And one of the reasons that there is debate about using the IRR in the industry is that there can be a misalignment of interests when it is used by a sponsor to trigger certain returns to them. So let's say that the sponsor is going to receive a certain return when the investors hit a, let's call it 15% internal rate of return. The problem is that the faster that the sponsor sells the project, the faster it's going to be that the investors will hit that IRR hurdle simply because of the way that IRR works. And what that means is that sponsors can be potentially motivated to sell a project, leaving money on the table too soon if they are motivated by an internal rate of return. Now, it is a very complicated concept to understand. So go to leadersofthecrowd.com/small change, where I'll give you access to an extremely detailed explanation of exactly what the IRR is and how it works. It's impossible to do it in 2 minutes, but in the next video, I will show you a nifty trick for understanding an important component of IRR and a question that you can ask sponsors to see just what kind of returns they are offering you relative to the kind of returns that they're going to get themselves. All right, that's it for today. Thanks so much for joining me. I'll see you in the next video.